Right, welcome to the Property Funder podcast. I'm here with James. Now, before we talk to James properly, I want to thank you for joining us. And if you are a new visitor to the Property Funder podcast, thank you. If you're a returning visitor, thank you also. Can I just please implore you to like and subscribe and give us a 5-star review wherever you get your podcast, so we can speak to more people like James, and also more people can hear from inspiring thought leaders and entrepreneurs such as James. So James, tell us your full name, the name of your business, and tell us what your business does.
Yes, so full name, James John McGregor. Real Scottish name.
I probably didn't need to know the middle name, but okay, we'll take it.
The business I run is now called P10 Financial Group. Originally was Mesa Financial, and we've just gone through a rebrand this year, which people may or may not have seen, which then also brought together our other business, which was a chartered accountancy business and tax advisory called Goldbridge Partnership. And yeah, that's where we are as of today.
And we're also in a business called Devonports. Do you want to just tell people a little bit about Devonports and what your involvement with them is as well?
Yes, so Devonports is a high-end estate agent that operates out of Hampton and now Twickenham, and this lovely setting that we're in is their Twickenham office. The guys there are good friends of ours, James and Aaron. Took the market by storm in Hampton, and then we have been lucky enough to have the opportunity to invest into their group to help them open the next Twickenham office, but hopefully a number of other offices in the near future.
No, it's exciting. And your investment in Devonports, is that part of a wider strategy? You know, you've gone from Mesa and in, I suppose, the residential commercial mortgage broking business, and you've gone into the accountancy business. The move into Devonports, is that with the intention of some form of vertical integration of your business, businesses?
I would love to say yes, Michael. I'd love to say I'm that advanced in my thinking. No, well, look. In theory, yes. We keep our investments or our business sectors all close to each other, so they can feed off each other. The thought process was they have the guys at Devonports are getting a strong foothold on the high net worth market in the local area. This is a market that we also have a foothold in, and we just believed it was only sensible to bring that foothold together. If we're hitting it from multiple angles, the odds of looking after more of the clients in this area are going to be a lot higher.
But I mean, presumably though, you know, from my experience of Mesa, you're not just you're not a Richmond and Twickenham business. You know, you're a national business. You know, doing transactions all over the country. So presumably, whilst Devonports presents you with a good local market opportunity in the local area where your business is currently based, ultimately your ambitions stretch far beyond that.
Oh yeah. Look, of course, we were not just national; we have international ambitions with the group. And what I mean, look, the plan with Devonports is hopefully that we're going to open a number of offices, build out the lettings, build out the sales function, and just build out a really strong challenger in the market there. But with the accountancy business, we believe there's international scope. Getting into sort of the bigger international tax advisory, we've done quite a lot of deals this year on. We've done quite a number of deals on acquisitions, M&A, advising on exits. So, like you said, the ambition there is to build this services group which delivers at the highest level across multiple sectors. As we know in our industry, it's very deal specific, and you always have to start year one with chasing your tail again.
Yep, zero, big fat zero.
Exactly. So look, Hugh made a mention of it on when you interviewed him before, that they're looking at integrating other services purely because it's building that cash flow, it's building that much larger offering with the business, and that's exactly the stance we've had. We look at the broking side and the advisory side, and it's then about, right, with this pool of clients, how do we deliver even more value to these guys? Can we make their life even easier? Can we make their life even more financially efficient, rather than just looking after one portion of the pie for them?
And so what are some of the ways you're looking to provide those solutions to clients and add value to clients? Because I think that's ultimately the heart of why you do everything, right? Which is you're very client-centric.
Exactly. Look, what we've noticed, which led to the accountancy, was we just wasn't happy with the service our clients were receiving from their accountants. There was never any, or there was a lot of non-future planning around, for example, transactions. Most people were going into transactions without taking tax advice. Most people in their businesses were not getting.
So just to take a step back, when you talk about transactions, are we talking about property transactions? But other business transactions as well?
Exactly. Other business transactions, including acquisitions or exits. And we just felt that if we had the skill set in-house, we could deliver at the pace for these clients that was required, and would allow them to maximise their financial position.
Is that because a lot of the time, the clients, accountants that you were dealing with, or client tax advisors you were dealing with, the kind of, uncle above the fried chicken shop types who were doing everything paper based, and they weren't that savvy. They were, their knowledge was sort of 15, 20 years old in some cases.
I think there's a massive gap. I think what happens is you've got these lovely SME businesses turning over between 1 and 20 million. Get to a certain stage with, like you said, Dave from working out his garden shed, and then then they start trying to work out the next part of the journey themselves. And then obviously their accountant just becomes obsolete in those situations, but they try and hold on to these businesses.
Yeah.
But they don't have the skill set to deliver the financial function around that. So creating things like cash flow forecasting, being forward thinking with your tax advisory, building sufficient processes for exits. As you know, you probably have to plan your exit 3, 4, 5 years out, if we're honest.
Sometimes, yeah.
So it was about building a solution to. Going back, then you've got the businesses at the other end who have a whole team of advisors around them. They've got KPMG, they're corporate bankers, they've got everyone around them trying to help them.
Well, that's businesses, I guess, which are at scale. So presumably you saw that and thought, right, how do I deliver that for
exactly
a more SME market?
Exactly. And then right, how can we deliver that for the SME market? How can we put the director in the middle, put them on the pedestal, and then make not just that director, but their whole financial life as easy as possible?
Yeah.
So, right, okay, well, this director is going to want to buy property, or they have property, they might want to upsize. Right, how do we do this the most efficient way for them? Well, okay, we have a mortgage advisory team that can then step in. Right, they want to buy commercial property, how do we do that? And then all of a sudden, everything in that client's financial life starts connecting together. And hopefully we've then built the solution with P10 that can connect all those dots together and stop having them or taking advice elsewhere, which then usually contradicts the advice that they've already been given.
Yeah.
Because people operate on advice from different capacities. But if all those people in the room are talking to each other before the advice is given, hopefully everything is then taken into account with that client's situation when delivering that.
Yeah, I guess the thing is you've got that joined up thinking, and it ultimately means that you get better client outcomes. Whereas I suppose if clients like, right, I want to do this transaction, and then they're however many tens of thousands deep in DD costs, and then their tax advisor or one of their advisors turns around to them and goes, no, you can't do this. But if you were having that conversation at the time they were making the bid or whatever, they would have saved themselves a lot of time, a lot of effort, or they could have adjusted their offer or structured their offer differently so that they would have got the right outcome.
Well, exactly. Like if we use that example, say you're going into an business acquisition, clients going in, you want to understand from the first moment you enter that negotiation where your leverage is in it. And not just leverage in financial leverage, I mean leverage in the actual deal.
Yeah.
Who's going to be able to help you with that? Well, your professional team around you, your solicitor, your accountant, your advisory team that's advising on the debt structures. Because then they can give you, right, here's what the business can cash flow. So then you're looking at, right, what's my day one requirement? Well, there's X amount of cash in the business. Right, this is what we can leverage out the business to give to the directors. Right, then what other vehicles on that balance sheet can we leverage to then give them the multiple position? And it could be the least money in, or it could be, actually, I just want to leverage one part of this balance sheet and the rest we'll use later on.
Yeah.
So, yeah, it's having that holistic view as you're way before you even think of it. And then, like you said, even then, is there then tax advisory starting at that point?
Yeah.
Because it's right, how are we then getting this money from point A to point B? Is it going to be equity? Is it debt?
Yeah.
Is it another mechanism? So it's all these thoughts coming into, which usually most companies over 20 million, they've got all these advisors around them.
Yeah.
What we're trying to do is bring that offer into the sub 20 million sector.
Oh yeah, I suppose, giving the little guy their own team of advisors and put them on a bit of a level playing field to bigger firms who don't think of that.
Yeah.
I mean, how did you come into the idea? You talked about how you came into the idea.
Yeah.
Of going into the accountancy route. How did you go about finding the right partners or the right people?
So
for that,
it's probably not the easiest thing
No.
to do. No, we as you've been to, we used to host networking events at our offices or in venues. And one of the people that used to come to those events was Chris, who's now our head of the accountancy team.
Yeah.
And through those events, we used to do deals with clients. So, one of the clients he introduced to us was a high net worth. All their money was tied up in a trust in Italy, I believe, and they needed to borrow money on a mortgage here. So he was able to structure a deal with a private bank where they only put 10% down, and they used the income from the trust offshore to borrow against the mortgage. I mean, here the lady was only a teacher, so but we managed to get like a 1.1 million mortgage against like a 40 grand of UK based income.
Right.
So like there was a few of these situations that were going back and forth between our business and Chris.
So you provided like some really good solutions for Chris's clients.
Yes.
So that was so you already built like that relationship.
Exactly.
And that trust.
We had that working relationship.
But presumably Chris has got a success. Chris is a relatively accomplished, successful accountant. Why does he say, all right, James, I want to come under your banner, as it were?
I think, well, look, I just proposed to him one day. I said, Chris, look, if we fund everything and we'll bankroll everything, would you want to set up your own firm? Because at the time he was just about to make partner of his existing company, and luckily for us, he was quite open to the idea.
Yeah.
I think he just had seen the way we operate, and I went through our vision with him and said, look, this is what we want. We want a fully integrated business that can look after these clients all the time without sending them elsewhere, so they're getting that maximum value. And we managed to convince him. It took a few months, but
of course, yeah.
We managed to coax him across.
Yeah, it's funny. I have a friend at the moment who's a completely different industry. He's in the marketing space, and he's been approached by one of his suppliers to go and set up a new firm. And I think he's on the fence, but I think he's kind of on defence, and he'll probably do it. But I think it will take him some time to sort of to go down that road. And I guess the challenge you've got with an accountant, and I think it's a lot of these sort of professional advisory professions. Entrepreneurship doesn't necessarily go hand in hand with with that type, with people who with the natural personality of people who go into that kind of industry. So quantity surveyors, valuers, more valuation people, and accountants as well, I guess as well. And so if you're also fighting that sort of natural instinct and urge to be safe.
That's it. Is that like you get institutionalized, don't you? In those as lawyers, as accountants, even bankers. If you look across a lot of the talent in the higher end commercial market, a lot of them are in the banks.
Yeah,
that's because you get so institutionalized, and then you just never want to leave that comfort blanket.
Yeah, that's right. I mean, it's ironic because with my experience within Avon, or what I've seen, what I'd seen a lot of, probably 4 or 5 years ago, was people were leaving. I don't know, using examples, Bank of Cyprus, Metro Bank. They'd worked in Shawbrook. We just released an episode with Mark Champ. He was a very effective RM at Shawbrook. They have these clients, and they build up this client book, and then they effectively just take their clients with them, and set up brokerages. But instead of just being able to sell the bank's offering, they're able to sell a full suite of products.
Well, that's exactly how we started.
Yeah, maybe we'll get onto that. But do you think actually in the last few years we're seeing less of that?
Yeah.
And why do you think that is?
I think the last few years has been very, very hard to jump into the market.
Yeah.
The barrier to entry is probably higher than it used to be.
In terms of setting up a brokerage?
Yeah, in terms of setting up a brokerage.
Can you talk about that just very briefly? Why would that be? Is it not just a case of you just go, you go under an umbrella, and you go as part of a network? Under an umbrella? Look, it's not a regulatory thing, a barrier, is it? Or
look, the challenges we had, for example, it took us probably 5 years to be able to get our own FCA license. When you're operating under a network, you can only do 30% of the business you really want to do.
Is that because a lot of the non-reg stuff you can't do?
Correct. So it took us a long time to actually be able to deliver our skill set.
Right, okay. Yeah.
Because, we went into a few networks, which, that's probably for another day, but and it wasn't right for us. And you're like, flipping hell, what are we doing here?
Yeah.
And then not only that, the time it takes for deals, you've got to go 9 months without salary. Yeah. Who's funding that? If you're going completely on your own, that's a long time. Most of the people that are at that end of the market will have families. Yeah. There's a lot that comes into play when people think, it's just easy enough to go and set up a brokerage. So there's the regulation barrier to entry, the time to completion, the actual knowledge. Unless you're actually out there learning or worked in a brokerage, I think you'd find it very difficult if you come out of a Barclays completely into your own business and try to start structuring real estate deals. You could credit underwrite all day long, but the actual skill set to go bang, bang, here's the lenders, here's what we're negotiating for you, here's the terms, here's the fee. You wouldn't actually know.
In fairness, that's right, because I guess if you've come out of Barclays or whatever bank, you're still going to have your only relationships are going to be within Barclays for the most part, and so I guess as soon as you get on the NACFB list, you become a member of the NACFB, you get on that spreadsheet. I'm sure your phone rings off the hook with BDMs trying to bring you cupcakes and things like that, but. But I guess even that probably takes time to get moving.
Well, you really only understand lenders when you do deals with them. Yeah. And a lot of it is trial and error.
That's true.
So especially when you're using new lenders, because every lender will come in and sit in front of you and promise the world.
Well, and you know, the funny thing is that we, you know, when we came out of the pandemic, 2020, Avonmore had, you know, when everyone sort of came back to life, we had probably the best offering on refurbs, you know, like light, medium, and kind of what we call medium plus, not really a heavy refurb, but quite a heavy refurb. And basically, we couldn't compete with another lender. I'm not going to name them, but I like them and I respect them. You know, I sort of say, well, you know, we were cheap. We couldn't compete with them, not because we were better priced. We had better leverage. But what we couldn't compete with was that they had transacted with all these brokers that we were trying to get business off. Yeah. And I was like, look, we're cheaper. We're cheaper. We're better leverage. Why can't we do it? And they say, yeah, but we've done business with them.
Yeah,
we've seen them perform. And understandably, if you're a broker, you know, you might have a client for 20 years, but if you get if you get it wrong for a client, they're going to be like, do you know what? My broker's fucked up here. I'm going to go elsewhere.
Yeah,
I'm going to try someone different. You know, invariably, you're only going to try a different broker. The same way you're probably only going to try a different accountant
when things go wrong.
Yeah. That's the thing that you're battling.
100%. I mean, we've probably lost clients to that, and we've probably got our foot in the door with a lot of clients when things go wrong. But also, I think it depends. You say that. I think that it also depends on what area of the business you mainly operate in. I mean, like if you're doing like large real estate, commercial, or portfolio deals, actually the margin to most big ticket deals is the most important thing. If we're talking, if you're borrowing 2, 3, 4, 5 million plus, that margin is very important. Whereas in bridging and
as we both know,
as we know, whereas in bridging and development, the margin isn't so important, but the delivery is probably a bit higher on the agenda for people.
I think without question, the delivery. I think the priority in bridging development is always leverage. I think it's leverage and deliverability. I think you see brokers kind of like to jump up and down about price, but I think they're often doing that because they maybe they haven't secured the client, and they need to find a way of justifying their existence with the client rather than that's actually something that's really important to the client. Because if you're doing a fix and flip, if you're doing a development, the difference between 11.5% and 12%, just using round numbers here, it really doesn't make a difference. It doesn't change whether you do the deal or not. Whereas that's actually, as we've been discussing this week, on a medium term commercial investment deal, it matters a lot. So
the difference is like 20, 30, 40 grand in your pocket. You're like, actually, I'd rather have that money in my pocket than the bank's.
Well, quite. Or even things like the deal we've been talking about this week. We're talking about the difference between an extra 5k going to the bank each month.
Yeah.
That on a £60,000 a year on a 2,000 square foot office suite, that's 30 quid a foot.
Exactly.
That's a refurb cost.
Yeah.
So that effectively, that's 30 grand that I've got to put in, might take out of my pocket to refurb that suite when it comes vacant. I might otherwise been able to do out of cash flow.
Yes.
Anyway, fortunately on that deal, I don't think it should matter too much, but
it can. It's a huge difference.
It's a huge difference. If in a, let's call it a more normal time, it matters. It matters a lot. In terms of how you and Fran got started with Mesa, or how you got into the mortgage business more generally, I know you came from maybe a more challenging background.
Oh, what, as a kid?
So how did you find your way? How did you find your way into the space and now be a sort of industry leader?
I think look, as you mentioned, as a kid, I probably didn't go to school till I was maybe 9, 10.
Wow.
Which was not the easiest starts to life. But I always count myself fortunate. I was quite a fast learner. As soon as you are in that environment, It was actually you pick things up very fast.
Yeah.
And I say fortunate because I do believe that's quite a natural thing people are born with. Because I look at other people that have had other opportunities in probably much more improved environments that don't get that, or don't pick things up like a sponge.
Yeah.
So I've always counted myself quite fortunate.
My instinct is you have a natural curiosity.
Yes.
Do you think that's fair to say?
Yeah, of course. About everything.
Yeah.
Absolutely everything.
Because the level of sophistication that when we speak and the things that you're able to talk about, and the fact that you're able to, let's say, talk to private equity companies and private banks, people who who somewhat got their nose could very easily have their nose turned up at pretty much anyone and everything. It really impresses me. So for someone who didn't start any formal schooling until 9, and then to be where you are now in your sort of early 30s is, it's quite an achievement.
I think that also that early start puts a drive in someone that probably you can't teach.
It lit a fire under you, basically.
Yeah, you look in, you're like, right, I will never, ever, ever want to be in those circumstances ever. Regardless of how much you remember it's not ideal. So then you just have this underlying drive to be like, must do more.
I think there's something about having a bit of a chip on your shoulder, like in a good way.
Yeah.
Obviously, we talk about people who are a bit chippy, and that they have got a chip on their shoulder, but then they have that in a negative way. Even though I went to private school, it was because my parents, particularly my mum, made huge sacrifices to be able to do that. I think it's that kind of immigrant mentality, and so I've always been quite hungry. Because as a result of that, because when my classmates were turning up to school in BMWs and Mercedes, I was turning up in my mum's clapped out, Nissan Sunny.
She spent all the money on your school fees.
Yeah, all the money gone on the school fees, and we didn't have
nice. It's nice to know it's worked out.
Yeah. And in the I guess that always transferred. And unfortunately, my mum's in a reasonably comfortable financial position after many years of hard work, and she deserved it. And interestingly, my father-in-law also came from very humble beginnings and hence built up a business as a result of that. And I think if you've got parents who kind of come from that, I think it does help. That's what I worry about with my kids, is that if they don't have that, that they're not going to have that hunger and that desire. So when they were talking last night at dinner about, let's set up a company, and what's the company going to do, and what we're going to call it, you know me well enough that the amount of pride I'm going to have there, and I am here for this. And then Josh says, but hold on, if we make £500 million a year, you have to split that 3 ways. I said to him, mate, if you make £500 million a year,
don't worry about splitting it.
You don't need to worry about the split. You're going to be fine. You're going to be fine.
Just share some with me.
Yeah. I'll be happy with 500 quid as a start. You know what I mean? But so what? When you left school, what did you leave school? 16, 18? And what happened after that?
Like school, after I started going to school was just a fun time with my mates, really, because I come from where I didn't have that. Then I get to go to school. I'm like, oh yeah, this is fun. Every reports, James could do better. I'm like, all right, yeah, but I'm getting by, so leave me alone, because there was nothing really there to be like, oh, this is my thing.
Yeah.
Left at 16, got forced. Well, my mum was like, you're going to have to start paying rent. I'm like, what? But at the time I was working at my best friend's, had a greengrocers. So I was working.
So you were doing the apples and pears.
I was doing the apples and pears, which obviously goes right down with my personality. I'd imagine. As you can tell, I'm not the most spoken person. So I was working at the greengrocers in the summer, and we worked there from like the age of 14 every Saturday, and then in the school holidays earning 50 quid a day. So we was rolling in it at the time.
And that's pretty good actually.
Yeah.
50 quid a day. I mean, I was doing like, manual labour for 50 quid a day.
That's what I mean.
Well, for 40 quid a day, actually, probably not even 50.
And I was working on the till, just chatting to people.
I could see you suiting you too.
Yeah, happy days. So, and then my mum was like, look, you're going to have to get a proper job because I'm going to start charging you rent. I actually thought I was going to go and be a journalist, sports journalist. I was like, right, what am I good at? I was good at English. What do I like? I like football. And I was never good enough to play for. I could kick a ball. As everyone knows, we won the Octane Cup this year, so we'll be back next year for the win.
I'm not sure they're going to invite you back, James, but from what I've heard.
We've been booed. But yeah, I was never good enough to properly play football. And I was like, right, I'll go and be a sports journalist. So went to college, went to Brooklands College, ended up really not going. I probably did about 20% of my time there, and then it was the end of the 2 years, and they was like, you've got 6 things outstanding, unless you do them you're going to fail. So I sat there for 2 weeks, smashed all through them, handed it in, got a merit pass. I was like, right, that's me all over, everything last minute, done. And then I had to get a job, so I was like, right, actually what am I quite good at, and what's my skills, and what have I done in the past? So I applied for all the banks, Santander, NatWest, Barclays. I was like, I'm actually half decent at maths, and I've got retail experience, so let's just apply for all the banks. And Barclays were the first ones to give me an interview, and luckily enough, they gave me a job.
What were you, like bank teller?
Yeah, I was cashier.
Cashier, yeah.
Come in as cashier in Feltham, the lovely Feltham. Yeah. So I learned to cut my cloth properly.
Yeah, well, you probably had to deal with a few challenging clients, I imagine.
Do you know what? It was so fun. It was so fun though, because you would, like you said, challenging. You'd have people coming in. I'd have people throwing up in my till. People serenading me at the desk, like singing. Yeah. So
what was that in the hope that you might, they were overdrawn and you might give them some extra money?
God knows what it was, but it was quite entertaining.
I bet.
And I only did that for 9 months. I was always quite natural at the sales side of the business, so they moved me into the personal banking role. And I did personal banking for 2 years, I believe. 2 years. Again, did really well. But as you know, in these big companies, there's a lot of bureaucracy. So it's like trying to and I wasn't very good at managing that then. I was just... You
wanted to go 100 miles an hour, and these big banks, they move like glacial pace, right?
Yeah, and like when things change, if I couldn't make sense of it in my head, I'd be like, what idiots come up with this idea? And like, we got to... I'll give you a good story. We got to... Hopefully the people don't watch this actually, because we got to
I'm sure enough time has passed that it
was 10 years ago. No, but I remember, so we used to make flipping really good money as personal bankers back in the days when you get paid quite good money to write a loan or do an account upgrade. So I was always like, because it was all about contact, it was just like talk to as many people as you can and you'll find a solution for them. It was quite simple really. But then one year they when all the treating customer fairly stuff changed at the banks, and they all changed to be like, oh, we're not banks anymore, we're here for the community.
Right, okay.
And it was like, well, we're not about making money, we're about serving the community, and all of this changed, and they changed the commission structures, and the whole commission structure come down, and it changed from like rewarding valuable things, valuable business, like people doing mortgages with you, people borrowing money from you, people upgrading to like the good accounts. They just started rewarding people for just opening a bank account. And I was like, yeah, but that's good. But what if they close it in 3 weeks' time? And I used certain areas like the households would always get loads of bank accounts. So I'd be like, well, yeah, that's fine, because they're coming in, opening an account, not using it, and then they're closing. What's the point in that? It's going to cost us money as a business. Why are we rewarding that? So at the time, my director come down and explained everything. I said, And I said to him, I said, I won't say his name, but I said, okay, so explain this to me. If one of my clients does £1 million mortgage with the bank, you're going to pay me less than someone that comes in and opens a bank account. And they went, yeah. I said, what planet are we on? And he went, if you don't like it, go and work in Southall. I was in Staines at this point, and I was like, right, I've got my, I understand where this is going, so I'll shut my mouth now.
Yeah.
But it was all that, it was that type of, in my head, I was always challenging those situations.
Yeah.
Because I was just like, this doesn't make any sense. So through the bank, ended up going from personal banker, and I always wanted to go into Premier, which was like managing the high net worth clients. You used to get a nice cushy portfolio. You'd be like, right, all your clients earn 200 grand a year, go and keep them happy. And I was like, that's my bag. That's what I'm going to be good at. I was already top performer where I was, so I kept pushing. And the same director, who I'd obviously pissed off recently, previously, knew I was trying to push for that role. And he come down one day to the branch I was working at, and he went, do you think I would put you in front of any of my Premier clients looking like that?
Oof.
And I just tapped him on the shoulder and went, thanks for the feedback, mate. And walked out. 2 weeks later, I went for an interview in the Richmond branch, and luckily enough at the time, the manager there had also had a similar situation with the other area manager. Yeah. And this was a different area. So I'm pretty sure I just got the job out of spite because I really fucked the interview. But they looked at my numbers and went, he's good. He can't do an interview, he's shit at that, but there's something there. And I got my job in Premier in Richmond, and I did that for 3 years. And then I got fed up of having to say no to everyone. As you can probably appreciate.
Yeah.
I'd have like brilliant clients sitting in front of us, and I'd be like, oh, sorry, look, we can't really help with that. We can't help. And it was just constant. And as you can appreciate, in this area, there's very entrepreneurial people. Yeah. Just for context, we're in Twickenham at the moment, so everyone knows where we are. Like Twickenham, Richmond, Sheen, Barnes. It's like just
very well heeled, southwest, posh southwest London area.
And like most of the people in this area are either business owners or business leaders.
Yeah.
So my portfolio is purely made up with these entrepreneurial people, and the offering we had at the time, we just couldn't fully service them. So that's what led to us setting up Mesa Financial.
And you set that up with Fran?
I set that up with Fran, my business partner. Who was my mortgage advisor at the time.
Right, okay.
So all my clients, I had never, ever advised on anything. I didn't even have my CMAP when we set up. All my clients come through me. I did the fact find, did everything, understood, and then passed them across to the relevant people to actually do the important bits. Yeah. Well, the advisory, really.
Yeah.
And Fran, I had to call him. I called him every day, basically for 3 months, being like, have you quit yet? And finally, he handed his notice in, and that was in March 2015.
Yeah, wow, okay.
And we wasn't then able to operate until September.
So what did you do?
I borrowed money from the bank and just lived off that. Yeah, I put myself in probably a bit of a hole that people don't really talk about.
Well, that's part and parcel of entrepreneurship, though, isn't it?
Yeah, exactly. I mean, for me, I was like...
But people have this very lofty... People have these very idealised images of entrepreneurship, and they often don't realise that people who haven't been entrepreneurs don't actually fully appreciate the sacrifices.
Yeah. Look, I borrowed 20 grand, I believe, just to see me through.
Just to keep the lights on, basically.
Yeah, and I borrowed 20 grand off the bank, so I had to service it as well. Wasn't earning a penny. So we didn't earn a penny from probably March that year, March 2015 to January.
So that was the first...
2016 was the first, because we started writing deals in September, so it took another 4 months for procs to start rolling in.
And that was predominantly just, residential mortgages?
Yeah, residential and buy-to-lets. Whereas at the time there was a buy-to-let market, so we was quite busy with the buy-to-let
And
market.
in terms of like setting up an office, what was it? Just a couple of laptops and a desk somewhere?
Yeah, we just worked from the kitchen. Literally just worked from
from your kitchen or his kitchen?
He worked from his, I worked from mine.
Right, okay.
And
So
then
not even together?
No,
physically?
not even together. No, I was just out meeting clients constantly.
And how did you, what was the next step though? Like what was the sort of the moment where you sort of really, things started to take lift off?
To be honest, I wouldn't say things really took lift off until like 4 years in. Like it was
Yes, fair enough.
those first 4, because we went.
That's around the time we first met, actually, sort of like beginning of 2020, that sort of time.
Yeah.
Yeah.
I'd say just before COVID, we was. Yeah, I'd say that's probably.
Yeah. You didn't even have you didn't even have the Twickenham office.
No, we bought that in COVID.
Yeah.
No, so yeah, it took us. I'll be honest, we didn't have a flipping clue what we was doing. I'd never. We set a mortgage advice company up. I'd never advised on a mortgage. Fran went on holiday the month we got our license because he went back to Spain to see his family, and I was like sitting there like, shit, I've actually got to write some mortgages, which I don't even. I'll be honest, I was like, I don't even know what I'm doing here. So we set that up, but what I did have is that unwavering belief that it was all going to work. Like that's one thing that I think a lot of people, when you're setting up, you just need that unwavering belief that things are going to be fine. Like I had no plan B. There was no plan B. It was like this or nothing. Do you like? It was like, well, look, I'm already in the hole.
Plan B is just do plan A better. That's
just
basically
just double down and see, right, where did you fuck up? Where did you not? What can we improve?
Well, I think that's a really good lesson because, before we set up Avamore, I had a real estate development advisory business effectively. The main client being our family office, but we were trying to do deals with other people outside of the family office. And honestly, I think the biggest mistake was we just didn't learn from our mistakes quickly enough. But fortunately, by the time we set up Avamore, we learned. I took I then had finally got into my thick skull all of the mistakes, all the things we did wrong during that time, and at least able to learn from them those mistakes. Of course, I then started to make a whole new raft of mistakes.
Yeah, as you do. Well, that's the thing with owning a business. Do you know how I feel? What it's like owning a business?
Yeah.
Is you're basically a startup every year, just at a different level.
Yeah.
Like all of a sudden you scale again and you're like, oh shit, what about HR system? What about this? You're like, no one's told me about this.
There's always a new challenge, right?
And that's like every time you step up that game, there's always something new that just throws the left hook, and you're like, oh yeah, didn't see that coming.
But I guess when you got to that sort of just pre-COVID, I think you took on you had Joe working for you, and you started to take on a few extra staff.
We had a few advisors, and I think we messed our model up at the time because we were taking on self-employed advisors. For us, look, it got us to a place in the market, but the people we were just bringing on for headcount. They weren't the people. This is one of the mistakes we made. We just acted.
Yeah.
We're like, yeah, come in. Whereas actually, we should just sat back and be like, right, are all these aligned to what we believe our business is? And how do they align? But at the time, you're just like, yeah, get people in and you work it out.
And what have you changed since then? Presumably within what was Macy is now is almost exclusively everyone's directly employed.
Everyone's directly employed, bar one from previously, which means we can embody our values to everyone, and everyone knows what to expect and knows the expectation of the business. So there's no half-assing things.
Yeah.
Like the standards are here. We're dealing with really high-end clients, really high-growth business owners. You can't afford to be down here with your standards. They need to be up here. Your contact needs to be up. Everything about you needs to be at the highest level. Otherwise, like you said earlier, you cock it up and everyone's just going to turn around and look somewhere else.
Yeah.
and you've done all that work and everything to bring those clients into your ecosystem, don't cock it up by not talking to someone for a few extra days.
I mean, it's so much easier retaining an existing client than it is winning a new client. I mean, you say it and it makes instant sense, but the number of times that people make that mistake over and over again. I mean, it's interesting to talk about the within the brokerage space, the self-employed versus directly employed. I was having lunch with someone who's I would maybe describe him as a peer of yours, and he's worked in a very large brokerage before. He's actually now I think it's now actually he started doing residential mortgages as well, which is a sort of a way of getting supplementary income, and obviously in the difficult times for the commercial market. And he's doing it under the umbrella of a large packager. And he was saying that it's absolutely imperative for him that everyone is directly employed. It doesn't want any self-employed people.
No, it upsets the apple cart. If you've got a few employed, a few self-employed.
Well, if you're an employee in a brokerage business, why would you choose employed over self-employed? I mean, apart from the I suppose the security aspect of it.
Yeah, look, I think if you're well remunerated for the work you're doing, you don't need to be self-employed.
Yeah.
And also, like, most origination, which is the key really, is through the business.
Yeah.
Unless you're out there and you're originating all your own deals, which, look, from our experience, 90% of people are not.
No.
Then it probably won't. You won't be better off. The only thing is the difference is, right, what do you want to? How do you want to live your lifestyle? Is this a lifestyle business for you, or is this a career? If it's a lifestyle, go self-employed, go under a network, crack on. If it's a career, right, come and build a career whilst we build the business.
Yeah.
And that's how we see it.
I mean, I guess speaking to the point you're saying about it's becoming increasingly difficult to set up your own brokerage now. Does that mean that in a lot of ways staff retention is a bit easier, and you don't have to necessarily don't have to necessarily offer partnerships prematurely to people that maybe aren't as deserving of it, because effectively the options for brokers are more limited to leave a firm and go and set up on their own?
Well, the problem, you say it, but mate, finding good people is the hardest thing anyway. So once you do have them, you do just need to deliver for them.
Yeah.
And give them the world if you can. Not the world, but treat them as they expect to be treated.
Yeah, and I suppose apologies to listeners who've maybe heard this conversation before, but it bears repeating. I suppose the difficulty you've got is that if someone's available, if a good broker is available, or a broker is available, whether they're good or not, it generally, you have to consider is like why are they available? If they're good, why would their current place want to let them go?
100%. Yeah, and look, there can be varied reasons. I mean, look, when we chat to recruiters or director people, you can see they might have been promised something within a business, and then that hasn't come to fruition. But yeah, there's normally a few other question marks somewhere.
So I know that from my own observation, you found it probably less difficult to build up the residential sort of regulated mortgage side of your business in terms of headcount. But the commercial side, it's been more difficult to train, not so much retain, but find staff that are good enough, and have them stay or have them be successful. Do you think that's remain a challenge?
I think that's a big one across the industry. Everyone we talk to, it's hard to find. First of all, the skill set. Like I said earlier in the conversation, all the skill sets in the banks, and they hold them. And then
and the people that are there, they don't want to leave because they're naturally too conservative.
Yeah, and like only until probably we get to a certain level of size, will we then become an option for these guys.
So how do you work around that? Because one of the things that we've talked about is that you don't want to be on the tools. You know,
Yeah.
you want to be working on
Correct.
the business, not in the business.
Yeah, exactly. And then the so that's the first one. The problems are, and then the next one is there's just, even the people that are in the industry as brokerages, there's not that many that can operate at the level that we would expect when dealing with the certain level of client, and the ones that are probably self-employed somewhere.
Yeah.
So that's the challenge that we face as a business, to try and bring. So I think what we've done, or what we're doing at the moment, is flipping that and bringing people in with a certain level of skill, and then training them through, and then just breeding that knowledge into the people that we have in the business.
I mean, from my own experience, with Avamore, from the lender side, I think that there is the talent pool in the specialist finance market is actually remarkably thin.
Yeah.
Very, very shallow. The same issues that you have trying to attract successful brokers to come and work for you is the same issue we would have trying to get a successful BDM or a successful underwriter, or fill in the blank. So trying to recruit horizontally, we've learned after many years, you can do it selectively if they're really, really exciting people who are going to maybe drive your business forward.
Yeah, and they're the people that it takes you years to get them, usually, doesn't it? Let's be honest.
I look at Dimitri as the example, as a key example, and he's then brought in Matt Foley into the business. But I wanted to hire Dimitri back in late 2019 to take over, to effectively take over running the business in the medium term. We only got him 2 years later. Yeah. 2 years later, we finally got him into the business. So it gives you that sense, and so that's why we have a really, really strong relationship with Reading University, the Reading Real Estate Foundation. This year I've taken on 4 mentees, and I had 3, and then they emailed me and said, "Would you take another one?" And I said yes. And the main reason I do it is that first of all, because I love I love that kind of I love the energy that I get from providing 100%. Mentorship to people. But second of all, I also see them all as potential new recruits, people you can bring into the bottom of the business and train up. So I think that's that side of it is quite exciting. But also it means that you've got people who've been with your business and know the standards from the beginning. And that's it.
I think bringing people in, that's the key, is the standards. If people can pick up bad habits from working self-employed, for example. Yeah. Start when I want, finish when I want. I only work days, whatever days I want. People get used to that lifestyle, because that's fine if that's how you want to live. But actually, you can't have a high-performing business operating at this level when all your staff are just doing what the hell they want, when they want. It just doesn't work.
You can't expect a self-employed person to behave and perform in the same way as someone who's directly employed. Exactly. They're like, well, you're not paying me a salary, so what? Yeah. So you can't really force me to do this.
Yeah. Or you can't have influence on it, because, like you said, you can't have that influence on the way they work.
I mean, interestingly, anecdotally, I've seen a few instances now of relatively successful self-employed brokers now seeking the comfort and security of employment, because the last 18 months have been very, very difficult.
And you come on, look, we've seen quite a lot of switching from broker to lender. Yeah. Which were seen as successful people in the industry. Yeah. Given what's happened in the industry, it's been brutal. But we've always said, in our business, when these times come, that's when we double down. Yeah. As you've probably now said, all our investments are now actually, we've doubled down across everything.
No, 100%.
Headcount, accountancy, our team, the Resid team. Because when you double down in those markets, it takes 2 years. Yeah. But that will turn around like you've never seen.
And then you really get the flywheel effect, don't you? Because if you build the accountancy business, that then throws off so many opportunities across the other parts of the other associated businesses, and so on and so forth. I mean, it's interesting. We saw Mantra Capital, who, you know, probably a bit slightly bigger brokerage than you were acquired by an accountancy group.
Yeah.
But it's interesting that there probably haven't been that many tie-ups of businesses like yours originally and accountancies.
I've never really understood it, because it's such a marriage made in heaven.
Yeah.
You've got commercial guys dealing with commercial debt. The first thing they should be doing is looking at their tax position. We've had multiple situations this year where we've been able to give tax advice within the transaction that saved the clients hundreds of thousands of pounds. And it's like, right, this is how we started. This is what they wanted to do at the start. We've come in and said, no, let's move X, Y, Z here, get signed off by the lender. And all of a sudden, they've got an extra couple of $100,000 in their pocket.
Yeah.
And it's like, I've never really understood. Like, the insurance is obviously a natural progression.
Yeah, and I guess we saw, I mean, when I had brought on Rob Jupp onto the podcast, and they recently acquired, or they bought into a business called Solstar Insurance. Is that I know we talked about it privately, but does that remains an area you want to get into? Yes. and have a insurance brokerage arm?
It is, and I think that will come with when we open our Bond Street location, which hopefully should be complete in the first week of January.
Yeah.
And then we'll have a foothold in London, and we're like, right, bring in those bigger ticket clients in, insuring their bigger ticket assets, and giving tax advice across the whole structures.
Yeah.
It's a no-brainer really for us.
So at that point, you'll have commercial and residential mortgage advice. You'll have accountancy. You have a residential agency affiliate, if we want to call it that, and then have insurance. Are there any other areas that you want to move into, or you'd like to expand into to provide even greater vertical integration?
Mate, look, we're in talks with project management.
Okay.
So maybe like architectural and project management. Just through our contacts, it's really early stages, but we could see that as a very solid offering to offer project management, architectural design, and lending.
Yeah.
With some of the bigger developers, it could be a no-brainer.
Yeah.
So that and then, but look, it's really early. That is, but I think for now our focus is double down on the accountancy and the debt advisory side of the business, get those up to certain levels, and then see where we are in sort of 2-3 years time.
You talked about wealth management as an area you were quite interested to expand into. Obviously, from the people that when I speak to some of your peers and I say, look, what do you think about going into wealth management? And one of the previous guests, when he sold out of his before mortgage business, he also had a wealth management business, which meant he effectively his non-compete wasn't associated with that, so he was able to work on that wealth management business, and then has now subsequently set up another brokerage. But when I ask other people about wealth management, that they say that actually probably one of the biggest headaches around that is the regulatory burdens.
Look, we have a wealth manager sort of in-house at the moment.
Yeah.
We're just trying to work out what we do, whether we buy maybe a share of his company.
Yeah.
Or whether we set up a whole new or we're just trying to work that out, because for us, we can get around the compliance side. Everything's compliant. It's like, it's a headache, but it closes that loop again.
Yeah.
Like, why would we want to help people build their businesses, exit them, and then not look after their wealth?
Yeah, correct.
It'd be silly, wouldn't it?
Well, quite, yeah. or more likely that, if they're natural entrepreneurs, I mean, like you or I, they're not gonna sit and put their money in a private bank and make their 8% or whatever. They're going to go again, and they're going to probably invest in that in other things.
And a lot of
you want to be part of that process.
Exactly, and a lot of the financial plan is also like tax advice from a different angle.
Yeah.
So the accountant gives tax advice from one angle, the financial advisor can give it from an investment angle. So for example, you could be like, right, let's advise to invest in VCTs, which is going to offset your income tax down.
Yeah.
And then once that compounds out, all of a sudden you pay no income tax in 5 years. So like structures like that, which fit perfectly with our sort of wealthier business owners.
Yeah, sort of like paraplanning, that type of thing.
Exactly. Yeah. So like, yeah, it would just be, these things are there, we're in discussions, they're happening, but we're not quite on the press the button yet. I mean, look, we've finished our rebrand. We're now rebranding our rebrand.
Yeah.
So, because that messed up. So there's a lot on the agenda for the next year.
I guess the other thing is, we talked about it. You probably want to spend a good consolidation period to actually make your existing businesses the best that they can be.
Exactly.
Because in my own personal experience at the moment, I'm working across 5 different businesses, and we talked about this. And actually, my biggest frustration is that working across 5 different businesses, plus the charity commitments I have with, with the props for Variety, the children's charity, means I'm spread super thin.
Yeah.
I can't really devote or dedicate anywhere near enough time to any one individual business. So I do a terrible job for all of them.
And that's what I don't want to get too lost in. Sort of just like throwing a few things here and there. Like I said, I want to focus, double down on, right, what's our core offering, what's our core business, right, how can we double down on that and get those processes perfect, get that business operating at the highest level, and then we can sort of look, right, what else is on the agenda, and then look, if somebody wants to come and pay us a huge sum of money for it, then happy days.
And in terms of the area of your business you think you're going to focus on the most now, I know we talked about the accountancy business is probably the area where you saw the most opportunity for growth. You still feel that way about the accountancy side of the business, or?
I think the accountancy side of the business, our aim is to start. Look, we're already onboarding huge clients in that area, so businesses 10 million plus. Our aim is to continue with that.
Yeah.
Because then that feeds everything else. That feeds the mortgage team, because we can then go and offer HR services. That feeds the insurance team, because we can then go and offer their clients private medical and so on and so their staff private med and so on and so on. That feeds the commercial team, because these guys normally have networks where they're looking to build out or develop. So I think focusing on that will feed everything else. Yeah. But look, in the commercial team, look, we're trying to bring on 2 more people as we speak.
You still trying to get that sort of director level hire?
If the right person is there.
Yeah.
Like as we spoke earlier, it's very hard to convince those people in for a number of reasons. But yeah, we're trying to bring two direct people. In the accountancy team, we should have another 3 people joining us probably by the end of Q1. We're looking at an auditor, so we can then do audits.
So are you going to be? Actually, hold on a second.
Just making sure.
So you're saying you're looking at an auditor, but is it going to be exclusively organic growth that you're going to have within the business, or because I know we've talked a little bit about acquisitions as well.
Yeah, no, we will go on an acquisition hunt. Probably towards end of Q2 next year. Yeah. We're trying to embed the rebrand, trying to embed the processes. Yeah. Once they're all embedded, and we're like, we can go and connect in 500 clients tomorrow. That's when we'll go in. But what we don't want to do is go too early and then go and piss loads of people off, upset all our clients. And you've worked so hard to get to somewhere where everyone's happy. It seems stupid to do so.
Yeah, you want to make sure that whatever you do, it's going to be seamless, relatively seamless, and people don't suffer changes to their service levels.
Exactly that, and it just needs to be like everything needs to be in motion. But also, it's expensive to grow. Yeah, and bring on.
No, it is.
In the accountancy, like the salaries are huge. So the cost to catch up, you've got a 6-month cash flow lag, really. Because you have to invest in the people first, and then you have to go and find the work, because you can't find the work because you piss people off if you've got the work and you've got no one to do it.
No, exactly.
So it's sort of like weighing up
it becomes quite chicken and egg, really.
Yeah, and it's very cash intensive. Yeah. Very cash intensive. And we fund all our own stuff. So it's trying to manage that balance of, right, at what stage do we need X, Y, and Z? And then what do we need to do to then backfill that? But yeah, look, we're managing, we're getting there.
Well, I think one of the things I've always admired about you is I think you managed to do a really good job of your own cash management, where we routinely talk about the sort of the amount of money you had in the bank and right, what should you do with it? And I think you resisted the temptation to go and buy more real estate. And actually, you actually listened to something that I said, which
it's still there, mate. It's still there. I do get tempted.
And actually, because I think the thing is, as Avonmore, we operate a very balance sheet light business, and we're like, well, why can't we just, so we have conversations, and we're like, why don't we just put some more money, some more of our own money into our lending, and say, well, because the return on investment of lending, or lending that money versus
other opportunities,
other opportunities, or basically hiring and investing in the business in staff, we get way more out of that than we ever
on the property side.
On actually just lending on property. So
I think there's that. The thing that I like with certain property is, ideally, if I can get my money out within a year, that's when I'll touch it.
Yeah.
So like I saw an opportunity in East Twickenham recently. I'm followed up. I'm sure I'll follow up again, and eventually they'll do it. But £1 per square foot in Twickenham, it was like 220 quid a foot.
So, I mean,
which when things are trading at £1,000 a foot,
it's a great arbitrage. It's worth going in for something like that.
You get your money back in 9 months once you refurb everything.
Yeah.
And then you refinance out with the new valuations, happy days, and then you sit and use that money for then cash flow elsewhere.
Yeah.
Is my usually what I'd look at when property.
But at the same time, someone who's sort of very much converted to loving income producing businesses.
Yeah.
I mean, talking about, I suppose it's a real estate business, but throws off incredible cash flow now is when you own a couple of wind turbines as a family.
Oh yeah, he was telling me the numbers earlier. It's ridiculous.
The consistency, and at the moment with the very windy weather we've got, I mean, it's a bit depressing when it's not. But the fact is, when you're receiving consistent cash flow, but you apply that to business people. You say, okay, well, if I hire another accountant, I can spend, I don't know, let's call it £500,000 or £1 million on a building, or I could spend that on 5 accountants or 10 accountants, and I'm going to get that, and what's that going to deliver for me cash flow wise? And then, of course, you've got the enterprise value that you build in.
Yeah, exactly. To be honest, with the accounts, I don't think we'll see any cash out of it until really like 5 years in. If I'm honest, if we go through the growth curve we're going through at the minute, I mean, we're probably on 100%.
Just because you're going to be reinvesting, whatever cash you get from
it. We're on 100% year-on-year growth. We've onboarded like 200 businesses in a year in that business, which is stupid numbers for the size of us. Even if we grow organically at that, without any acquisition, like you're having to invest constantly to fill that backlog of staff you need. And then you've got all the marketing spend, everything else that goes with it.
Would you, just thinking about it, would you ever think about maybe investing in or backing a commercial real estate agency?
Yeah,
especially considering the nature of your clients.
100%. Later on, or if anyone listens to this and they've got an idea, we're always open to conversations.
Yeah, I mean, there's a commercial agent you and I know, and and I've tried to sow that idea in his head, because I think to myself, I do think to myself, look, done right, it could be, with the right individuals, done right, I think you can do very well. I mean, a commercial agency, ironically, would actually be very complementary to a business like Avonmore, where we finance a lot of commercial to residential developments as a starting point. So we'd have a lot of clients who would be natural acquisition clients for this business.
Yeah.
And then maybe they'd become an introducer to a broker or a number of brokerages, whereby maybe if we're not the best lending option, then they can still get an intro fee from a broker or a packager. So to my mind, it makes a lot of sense. But I would imagine for a broker, for a commercial
Oh,
finance
yeah,
brokerage
look, yeah.
and accountancy business,
Does make a lot of
sense.
It does make a lot of sense. Do you know what I found out in the commercial world the other day, though? Is it's not as lucrative. The lettings isn't as lucrative as the residential lettings.
No, because you only get paid once every per lease term.
So actually, the cash flow in that business is actually not ideal.
It's not as reliable, but I think in a funny way, particularly in the office space, as the office space starts to go from, kind of, there's a sort of divergence where you've got you've got your 50,000, 100,000 square feet, BREEAM, zero, negative, whatever you want to call it.
Yeah. Grade A,
and those are going to be like 15. Those are going to be like 15-year leases or whatever, 10-year leases. But then the other end of the spectrum, everything else is going to be annual, year-to-year lettings.
Yeah.
So if you're a business that's operating in that space, and you'll be getting, effectively, you're going to get
every year,
you'll get much more consistent income.
Well, I guess it's similar coming back to that SME market.
Yeah.
That flexible SME market. How do you utilize the shift in dynamics?
Yeah.
And that's obviously one. Shorter leases.
What's the end game for you though, James? Is it are you looking to be the big fish in the pond, or would you ultimately be happy to be acquired at some point by a larger financial and have an exit and ride off into the sunset?
Look, to be honest, at the moment it's just build and build and build.
Yeah.
Enjoying what we're doing, love it. Even the shit days are good.
Yeah.
So, but when you actually look back, it's good fun. If someone comes and offers substantial money, you'd be silly not to entertain certain conversations. But then it comes back down to what would I then do? I'd probably have to look at rebuilding again. So
you have to find something else to do, right?
Yeah, exactly. And I'll probably have a non-compete, so I couldn't stay in the industry. And be right. What am I going to do? I'm only 34, so I'd have a lot of spare time on my hands, which I'm not sure I'd be able to fill at the minute.
Well, I guess we're probably not talking any time soon. And the ironic thing is actually that I've increasing, whilst I've been attracted to the idea of an exit, the more when you start to see that, when you're actually able to take a dividend from a business, albeit not really having taken much out of the business, Zahara and I, over the last 8 years, we can actually, you now see a path to a consistent, chunky dividend every year. You start to look at that idea around an exit as, okay, well, someone's going to drop, 8-9 figures in your bank account.
Yeah.
And then what? That then
well,
what question?
You'd then just invest that in an asset that's generating the dividends that you're getting now anyway.
Yeah. Well, quite, and possibly not even. So
yeah, exactly.
And probably won't give you the same level of fulfillment.
No,
so,
exactly. And also, how much is enough? It comes to that question. Like,
that's a very important question.
Actually, sure. Do I have a nice lifestyle? Yes. Do I live in a nice house, nice location? Happy days. Am I happy with everything else? Yeah, well, okay, what more? Somebody gives me 20 million quid tomorrow. What more could I physically do with that? Probably not much more.
I think someone gave me that amount of money tomorrow. I don't think it would change the house that I live in. It wouldn't change the school my kids go to. It wouldn't change. I don't think it would. It probably wouldn't change the car I drive. Frankly,
yeah, exactly.
And it's not like I drive a fancy car. That's it's more. I'm quite content with what I've got. I wouldn't necessarily want to change that. So yeah, I mean, it's certainly an interesting one.
Look, one of my things that we are on the thing of building is I've spoke to you about this before, is a financial platform.
Yeah.
For individuals to manage their financial life,
to see where all their assets are,
snapshot of your asset and liability, but then not only that, to give you live data. Right, what's your cash flow? Your business, all of your business is doing. Can we pull that in from your zeros, and then can we build a cash flow model in this system that is better than what is it? Because the zero or the accounting ones aren't great.
No, I can speak from experience.
Yeah.
As someone who used to do the bookkeeping in Xero.
That's what I mean.
Yeah.
And then right, where are all my financial products? Because if I ask you now, where's all your pensions? Where's your invest? You wouldn't know where to get them.
I mean, I certainly don't have a single source of truth as to where all of my where my financial
exactly, and most people don't. Like, and we know this firsthand because every time we have to structure debt, we get an A&L.
Yeah.
And no one has it at the click of a button, and it's never updated. Whereas imagine you had if there was a live A&L that was getting updated constantly, and every time a bank needs it, you just download the PDF, ping it off to them, happy days. So that's what's next on the agenda in terms of the bigger thinking with the business. And then we will launch that with our clients, get it perfect, and then potentially to the market.
Well, that's probably something that would be very attractive for, I would imagine, private banks for one thing.
Well, to be honest, I think all banks. I think if there's a standardised, white-labelled way that people keep their data, that they have it in a readable format.
Yeah. Fair enough. Yeah, as having recently made a commercial property finance application, and
painful.
Make that application a little bit more straightforward. Yeah. Or that part of it.
Well, exactly. And like, look, people have property portfolios. Most of these are on spreadsheets.
Yeah.
It's like, well, why don't we build a live system that gives you notifications, gives you live updates?
Yeah.
And it's just
it's all quite doable as well. I mean, as you know, we've been doing a lot of work around the tech in Avamore, and building out a suite, lots of suites of packages within that. And what you're talking about, when we look at, one of the things we're going to do is that when we look at a client's A&L, their net worth, you can plug into a land registry API, for example, and you can
pull all the live data.
And you can pull the live data.
It's a no-brainer, isn't it? So imagine you had a constant live feed that was just for all of this data.
Exactly. Oh, I suppose that you've got that open banking data, you've got the business cash flows, and you can sort of it makes a lot of sense.
And then all your important documents are in there.
Yeah.
So you know exactly where to get everything. Your car insurance, like all this annoying stuff that is just a headache for most people. If you can centralise it all.
Yeah, it makes a lot of sense. And I think 5 years from now, I think particularly with I think one of the biggest unlocks from AI is that the rise of AI is that people like you and me, what we can do in the tech space, which would have taken us, the best part of a decade probably to develop and learn the skills to be able to do it from a coding perspective. We can probably do it, and if not do it ourselves, we can probably design prototypes that we hand over to a tech person.
Yeah.
To someone who's got a really good coding background,
and say, this is what we want it to look like.
This is what we want it to look like, or these, we've layered in some basic functionality, but we now want you to do this, and this. Right, just perfect it, finish it off.
Yeah.
So I think it's a really big unlock, and the example you gave there, the things you're saying, like I hear it, and I'm like, all of that is very possible, and actually it won't require anywhere near as much time and money as it would have done. No,
exactly. Yeah, that's exactly what we're.
But then I suppose but what that does, I think, is it unlocks that art of the possible, and you think, well, what else can we do?
100. Well, and yeah, right. Okay, so we get this right. What more could we build into that?
Yeah.
How much easier could it make people's lives? I don't know. Right? Can we build people who then could go and source their own mortgages in it?
Yeah.
And just bring in an advisor when they need one, rather than wasting their own time and our time and everyone's time. Right? Why don't we utilise the tech to save all that?
Yeah.
So, yeah, it'll be an interesting few years.
I'm here for it. I'm very excited about it.